The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and you got markets trailing off the highs a bit. We just had the S&P trade off about 25 points since I've been sitting in front of my desk this morning at about 6 a.m. We were up there at 41.67. We have some economic data this morning. We got some PPI data this morning. We have jobless claims. We'll get into it. 8 a.m., we spiked to 41.62, and just like that, we've given up 20 points right now. S&P's down by 10 points to 41.41. NASDAQ 100, barely in the positive, 13,417. You have the Dow off 200, 33,507. Is that going to be some banking? I think so, because what you have here is Pac West is going to be down $1.30. We've been talking about it, folks. You're seeing these rallies. Don't think it's over when you see this type of volatility, especially in banks. And why not? Let's jump over to that headline. There you go. Their deposits dropped 10% after report of investor talks last week. Yeah, last week, after news that the lender was in talks with potential investors, deposits dropped 10% last week alone. So that's sending a little bit of shudders through the banking again. You got Pac West going to open down about $1.30 to 472. So you have the Dow off 207, 208, and you get the Russell off almost 0.9%. There's a drop off for you, man. We're pushing the lows of yesterday. You jump over to crude, giving back some of the gains we've had recently, 71.47. Gold up $3 at 2,040. We have Bank of England with a rate decision today, hiking by a quarter basis point. We got the 10-year right now up 17 ticks. So what do we have? We have lower yields. We have a dollar that had pulled back, but since about 8:30 has rebounded to 101.84. And with that, we have some market weakness creeping into things right now at 41.38. Boy, you talk about some volatility yesterday, man, right? I'm on the program at 9:30. Markets are escalating lower. We did catch quite a bounce back up to 41.60 right after I was on the air. And this is what I was talking about somewhat yesterday, folks. There are such large moves going on in this market, man. Do not be afraid to take small losses. It's in the moment, folks. Okay? When these moves are right around the corner, you want to say to yourself, you know what, I'm going to give this trade a little bit longer because the next turn might be right around the corner, and I'd hate to take my loss right before the S&Ps trade down 30 points in an hour, right? Or they trade up 50 points over the period of a couple hours, right? Maybe you're buying near the lows of 41.25 yesterday. You're saying to yourself, man, I'm going to give myself 5 or 10 points in the S&Ps. And yeah, you come right there, and if you missed it, that's a shame, right? But folks, there's moves everywhere in this market, okay? And you're talking about 30 to 40 to 50 point S&P moves in this market. We're seeing it again this morning. I mean, we're already down 30 points from where we were at 5:30 in the morning this morning. And with that in mind, which is interesting, is that you jump over to the VIX. And yeah, we're at 1777, but a VIX at 16 means a 1% move every 1 out of 3 days. And just looking at yesterday alone, how many 1% moves did we get, right? I mean, you're talking about a trade where we traded up 1% yesterday at 8:30. You then traded down 1.5%, followed by a rise of another percent, and that was all by the end of the day yesterday. And today we're approaching almost a full percent down from where we were as well. So large moves in this market, even with the VIX at 17. All right, what else we got going on? Let's jump around to some of the headlines. And we'll kick things off with the Bank of England. So the Bank of England, they match the Fed's rate rise. They rise by a quarter. There may be more. They also upped their projection for GDP. They raised the rate to 4.5 from 4.25 on Thursday, having begun to tighten in December of 2021. Highest level since October of 2008. The move over 12 steps, the largest since the 1980s. The same one as the Fed, of course. And you jump over to the pound. So look at that. You initially get a spike, and we actually got weakness as this thing rolls over to 125.63 right now in the pound. You jump over to the euro US dollar. We're pushing the lows right now at 101.24. And the dollar rebounding to the upside at 101.83 right now as we got dollar strength on lower yield and a lower market. Always interesting how these relationships are going on, right? Not exactly the case that we've been seeing. Quite a bounce right there when you're talking about the price of the 10-year. We got lower yields coming at you, and that has to do with some of our data points that we're talking about. And when you look at what we're talking about, how about PPI rising 0.2% in April, trailing the estimate for a 0.3% increase. Initial jobless claims reached the highest since October of 2021. Chairman Powell with an extra step in his stride this morning, because that's got to be good news for him, man. And the market's down about 14 points. You're going to have to see that weakness to get the pause. If you start seeing PPI numbers missing, you start seeing CPI numbers being slightly under projections, and those projections continue over the next month or two, then yeah, I imagine that they will pause. Whether they ever go for a cut this year is an entire conversation that you could have for the hour. But yes, encouraging data, and nonetheless, we're seeing decreasing yields. We're still seeing a dollar strength, though, which is interesting when you look at that relationship as the dollar just off the highs you had pre-market at 101.84. All right, we jump over to Disney. Tough earnings for Disney last night, man. They're down about $6, almost a 6% move to the downside. They miss on subscribers for Disney. Let's see, I think I got a couple articles pulled up on Disney. We'll get into the numbers, though. Earnings per share, they match it. Revenue, they beat slightly, but Disney Plus total subscriptions, 157.8. The market was looking for 163. Now, only 800,000 of those were domestic. A lot of them were in the Hotstar app, which is in India. And the average revenue per user for that Disney Hotstar app is not even close to what it is domestically. Nonetheless, it is a miss on subscribers, man. And I wonder, as a Disney bull in the long term, if maybe this is where they've kind of taken their chops in terms of the market realizing. I'm trying to figure out which one. I think I have it on this journal. Yeah, this is the one I wanted to look at. This is the Disney Plus paid subscribers per fiscal quarter. Okay, I'm going to blow this up a bit. They've peaked, man. Okay, even if you come back to growth, I think the market is pricing that in dramatically. Not bad getting into Disney shares at $95 in the long term, folks. I was talking about this with friends yesterday. So this stock does not have, I'm going to take some of this off eventually, but this stock does not have the price action today, which brings it down to about 95. Okay, and 95 is, folks, you go back to when Disney entered 2015, okay, you consolidated for 5 years before this thing blew out to the upside during the pandemic. You accelerated slightly above it coming into the pandemic, okay, and that really was the first ideas of Disney Plus, was that real acceleration. In April, they came out that they were actually going to undercut Netflix pricing, right? What was it, $4.99, $5.99 a month? Market loved that idea. They delivered with that idea, came into the year with strong numbers, pandemic hit, and then they accelerated to 203. You're going to open at about $95. What are we trading? 95.20. There's about 95 on that chart. It's an area of support going all the way back to 2015, man. And the important part is expectations trim dramatically when you look at this chart. You better trim them too, okay? Because the title of this article, I think, is that, well, I got one of them up here, that the streaming wars are over. Yeah, as in that is a growth chart that is shrinking. Stay tuned, folks. We're coming back talking to our man Kevin Hincks from TD Ameritrade Network. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We at the S&P right now, negative by 13 points, trading at 41.39. Interesting in the context of yesterday, right? Yesterday, we get some CPI number. As I mentioned at the top of the program, pretty decent numbers, under expectations to some degree on the headline, at least not a surprise to the upside. The market seems to love that number in the beginning of the day, trades off, and then loves it by the end of the day and finishes higher. This morning, we get some PPI data, easing again. Jobless claims, 263,000. Market takes it, and we're running a little bit negative by 13 points. To talk about it, folks, let's jump over to our man Kevin Hincks from TD Ameritrade Network. You can check out the program, folks. Fast market every day, 12 noon, right here on Tiger TV. Check it out. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Yeah, we just got some PPI data at the bottom of the hour here, and I'm not sure anyone cares, Tommy. I think there's bigger things going on out there than PPI right now, and I think the Pac West news has got the ruffle down about 1%. I think that's weighing on stocks to at least start the day here, Tommy. Disney's earnings are problematic, even though these stocks, even though the earnings were in line and revenues were slightly above expectations, the fact that they lost 4 million subscribers, that's how those companies, whether they want to or not, Tommy, that's how they get judged. And that's why the stock's heavy. Streaming's a mess, let's face it. The bottom line is that linear TV, or TV in general, that whole pie of people that watch TV is shrinking. And these companies, both linear TV, streaming, cable, they all got to figure out why these numbers are going the wrong direction, Tommy. And I don't know if they're coming back. Millennials don't watch TV the way that we do. So Disney's got some problems, even though it isn't in parks. It isn't in really movies, but it's all things streaming and TV and those. So they've got some problems there they have to figure out. But I think Pac West is going to creep into the markets today, Tommy. I think losing 9.5% of your deposits in a week is not a good sign.
Pretty staggering numbers, man. It's almost, I don't want to say self-fulfilling, right? But once you reach that type of a headline, man, who keeps their money and who's the next 10%? How long does it take? Because that's a pretty staggering headline. The stock down dramatically today. And as you mentioned, the Russell down almost a full percent. You got the Dow off 200 points. Back to Disney for a second. Some pretty harsh numbers, man. They lose subscribers. I had pulled it up, Kevin. I was looking at a chart earlier. And you look at the Disney Plus paid subscribers going quarter for quarter. And, boy, it looks like we've peaked, man. You hit 164 million in the fourth quarter fiscal year 2022. Then we're down to 161.8. And you're talking about 157.8. Maybe at least some of that is priced into this equity, trading at prices that we kicked off 2015 at, which is pretty remarkable for that company when you think what's happened. I was also reading, because you talked about where are they going, an article in the Journal, Kevin, talking about how they're going to use the NFL Sunday Ticket to lure advertisers on YouTube that they're paying billions of dollars for. And one statistic I found so interesting in what you were talking about, in March, 7.8% of American TV time was spent watching YouTube. That's up from 6.9% just 6 months earlier. And I would say, my goodness, now Netflix only has 7.3%. YouTube now has 7.8%, and they grew almost a full percent in 6 months, which is staggering when you think about the amount of TV that is watched to grow almost a full percent. But you know what? You said it. I said it. We broadcast Tiger TV on there. It's quite a platform, man. But you tie it all together, they have some issues on those streaming numbers, to say the least, right? We walked through some of the companies, Kevin. We still have some earnings. We got some economic news. Jobless claims up to 263,000. What are you guys talking about on Fast Market coming up today, man?
Well, we're going to look at earnings that are coming out not only this week as the numbers are getting pretty thin, Tommy, but next week as well. We'll start looking at earnings because, as you know, the second half of earnings season is about retail. And so we'll start looking at some retail names. As I look at the calendar, there's not great names out after the bell today and out tomorrow morning. So we're still in the decision-making process. But I imagine we're going to start getting into retail, Tommy, because that starts coming out next week, as you know, and the second half of earnings is all about the U.S. consumer. That's what we'll be looking at.
Well, Kevin, I appreciate the time on a busy morning. It's always interesting when we talk to you Thursday because it seems like so much is happening in these markets before I talk to you on Tuesday. Before I let you go, what do you think about the VIX? Because, boy, yesterday's moves, man, just rip-roaring rallies, trade-offs. The VIX, you could make the case, man, pretty decently valued, even at 1780 when we're getting, I think yesterday alone we had three separate moves between 40 to 50 points almost in the S&P, and the VIX is chopping around here at 1780. What do you think about the volatility priced into this market?
Yeah, the VIX needs movement for the VIX to maintain these levels. I know the VIX seems cheap for the last 24 to 36 months, but historically, just widen out your chart on the VIX, and it's not cheap, Tommy. For mid to late May, it's actually quite expensive. And if the problems that cause high inflation or high implied volatility for the last 2 years are dissipating, like COVID and supply chains and the war in Ukraine, VIX is still historically high. And if we get a moderate summer or a summer rally, the VIX can absolutely go lower, Tommy. Now, it can also go higher, but there's got to be some reason for it to go higher, Tommy. And I just don't see that right now. There could be, right? We never say never. Sometimes there's things on the calendar that cause the VIX to elevate, and sometimes there's things that come out of nowhere that cause the VIX to elevate. But that said, the all-time average for the VIX since they moved to the S&P 500 is 15.4, Tommy. And if you widen out your chart, you can see May, summer, it spends a lot of time below 12. And so if you look at where this number is right now, it's high historically.
That's why I asked the question, man. I appreciate the answer. And yeah, you widen out that chart, man. Pretty amazing when you go back to single digits in some of those years, not that long ago in the VIX. Well, Kevin,
Tommy,
I appreciate
when it was single digits, I was long it. Trust me, I remember.
856 on the Thinkorswim platform. I say, wowzers, man. That's what pops out. Pretty amazing. Kevin, appreciate it as always, man. Have a great program. We'll be watching at 12. Have a great weekend. We'll talk to you Tuesday, and we'll be watching today, man.
Thanks for having me on, Tommy. Have a great weekend.
You too, Kevin. Folks, check it out every trading day. Fast Market from the TD Ameritrade Network, 12 noon Eastern time. They walk you through hypothetical trade setups. They're talking about 3 trades. Every single program usually is what they walk you through. All of them have defined risk. And I always say, even if you don't trade options, it really helps to understand how they trade, how the volatility is priced in, what kind of value is priced into expected moves, implied moves, etc. It's pretty cool. And I've learned a tremendous amount myself over the years watching Kevin do his program and now the team they've put together at TD Ameritrade Network, which is outstanding over there as well. So markets this morning, yeah, Kevin referenced it, right? I mean, and how do you come back from reports like that? It's a self-fulfilling prophecy in that no bank can withstand a run, right? Any bank that has to endure every single depositor wanting their money cannot do that in the long term because they have investments that have longer duration. So therefore, it's almost self-fulfilling. Once it starts, it's not going to stop. And that report alone, 10% of their deposits are going in a week. Here's my question. What are the other 90% of the depositors doing even, right? What are you doing this morning if you see that report? Oh, they're going out. I'm taking my money out. So be careful, even catching some bids that may occur on that equity. We'll come back for the open, folks. Stay tuned.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. You got the S&P opening at about 41.41, negative by 11 points. NASDAQ barely in the positive, 13,427. And yeah, the Russell catches barely a bid, but you're still off by about 0.2% right now at 1753, and the Dow is off 0.6% right now. Jump over to Pac West, 24% in the red right now. Excuse me, folks. Crude off $1.13. And we jump back. Let's see how Disney is trading as they open up. Disney shares down 6.1%. So it will be interesting, folks, in terms of, you look at that chart, and I talked about it with our man Kevin Hincks, okay? And we'll go back to Disney for a moment here. Sorry, one jump here. This is now priced into the market, okay? They lost 4 million paid subscribers during the quarter. Its biggest drop ever, and a shock to analysts who expected to add 1.7 million subscribers. That is now priced in with the equity down 6%, okay? And I would imagine that there's a real different world priced in when you go quarter to quarter, 164.2 to 161.8, and then you're talking about 157.8 is the next quarter in there. And then jumping over to YouTube, okay, this is the competition they face. Now, YouTube paid about $2 billion a year for the NFL Sunday ticket. And what they talk about here is the annual showcase for the biggest networks, for the advertisers at the upfronts, okay? It's the biggest networks and advertisers looking to place bets on new programming. I mean, check out just from July of 2022, folks, okay? Not even a year ago, Netflix was pulling in 1.3% more TV time than YouTube. And within the space of less than a year, YouTube is now 0.5% ahead of them. Netflix is a declining trend. YouTube is an increasing trend. Meanwhile, Hulu and Prime are stuck. There's something special about YouTube, man. And that is not going away. And YouTube is the new television. And now they're going to be in DirecTV. What you do have battling there, if they were separate companies, and if the multiples weren't too out of whack as this market sells off, I would say you could buy YouTube. Google's up by 3%. Not sure what's going on there. Let's see. Upward momentum is what they're talking about. Either way, yeah, maybe they got an upgrade or something. They're up 3% today. What's going on with Google? Does anybody know the Tiger's Den? Let's see. Yeah, but what I was going to say is that you face the risk that you'd own an equity that's valued at having a monopoly on internet search that may be just about to lose that monopoly. They've held a monopoly on internet search for 20 plus years. You think about that? Remarkable. Almost impossible to think that monopolies even exist for that long. Decades-long monopolies on a technology like the internet search function. And so that might be facing some heat. Guess what? Not facing heat today, man, with Google up by 3% right now. You jump over to Microsoft shares. Let's put it back to a short term. Everything else trading lower, though. Microsoft down 1.4% right now. We got Google share. No, I just did Google. Amazon shares. Even Amazon's a little bit higher today. Interesting. We jump to retail. Walmart is flat right now. Target shares down by 0.4%. Tesla shares in the red by about 0.8% right now. Did I do Microsoft? Yeah, Microsoft. There's a drop for you, man. And how about the big dog Apple? Off only 0.2% right now for Apple shares. Let's see how Pac West is doing. Down 23%. Western Alliance. I'd say, I mean, if you had any of these equities, man, you better be willing to lose it all. That's all. Because there's no reason why Western Alliance isn't going to come out with similar news. And they're only down 3%, and you got Pac West down almost 30%. Yeah, and maybe those are trading curbs coming in, potentially. You're down 28% now. Be careful, folks, because the banking crisis is not over. And you get a headline like that, as Kevin said, you're worried about more important things going on in this market, and we're still sitting at pretty lofty levels, okay? That's the one thing you got to remind yourself, and I said it coming into this meeting, man, how ironic it would be if you came into the meeting that they indicated a pause was coming, and you came into that at basically the price point of where you sat when the Fed began hiking 14 months prior, And that's when the downturn could potentially take place. But boy, we're seeing some slowdowns, okay? And that is the case for cuts, if it's going to be the case, folks, later in the year, right? You start seeing dramatic slowdowns. You start seeing weekly initial jobless claims rising above 260, above 270, above 300. We need to see unemployment go up. Has to happen, man, because wages are a part of that for sure. And wages are not going to stop if unemployment's at 3.4%. So we'll see where that goes. All right. We jump over to Best Buy real briefly. So there's an article out there on, excuse me, CNBC talking about that they're doubling down on their subscription plan that you can choose. What do they call it? Their membership program is what they call it. The one thing I wanted to highlight here, they're in trouble, man. Look at this chart of annual revenue by fiscal year, okay? They're back to 2013. They're back to revenue that they were doing in 2013. Now, you blow this one all the way back. In 2013, you got an acceleration up to a price of $40. You're still trading at $71, folks, and they're doing the same exact revenue that they were doing 10 years ago, okay? And they're declining. You know, their future is not going to be locking people into monthly payments to some type of reward program for their retail store. It's just not big enough, man. I can get everything at Best Buy, at Amazon, Walmart, and Target these days almost. I mean, not all of it, right? But that's a headwind if their future path is signing people up for subscriptions. They're going to have multiple tiers, okay, a 3-tier program, a lower priced option, perks like exclusive discounts and access to hot products. I mean, it sounds like a scam. It's not, okay? But who really needs these things? You don't need an active subscription to Best Buy, folks, okay? So be careful of that equity, because I was surprised to see that revenue number. You go back to 2013, this thing's been on a one-way trip since 2013. Now, you had quite a run up. You started 2012 at $12. You finished that year at 40. We're still sitting at 70, and now revenue seems to be going down, and we're at the same revenue that we were at in 2013. And what are they doing to innovate? They're going to start signing people up for recurring subscriptions to their plan. Yeah, not sure of that one, right? Okay, what else we got up here? There we go. I want to talk a little homeowners. All right, we'll tease this as we come into the break. Let's check back to the markets. S&Ps. Yeah, be careful today, folks. That's quite a drop-off. Yesterday's low was 20 points lower. We go right back to where we were on the open, and this is kind of what I was talking about when I was saying keep your stops in place, man. There's 40 points in the S&P just since 5:20 a.m. this morning, and we're only 8 minutes into the trading day, right? Not bad. When we get back, we're going to talk about nobody is selling their houses, okay? We'll take a look at some of the statistics here and check out who has mortgages where. Active primary mortgages by interest rate. Basically, everybody's got under a 4% mortgage, okay? You have 2/3 of primary mortgages have an interest rate below 4%. They're not selling when interest rates are 6.5% to 7% right now. Stay tuned, folks. We're coming back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have the S&P down about 15 points right now, trading at 41.36. So jumping back to that article I was talking about. Let me see if I can. Yeah, here we go. So first of all, you got to take a look at where people are, okay? About 2/3 of primary mortgages, most of which are 30-year fixed rate loans, have an interest rate below 4%. And check it out on the chart, man. You're talking about a huge drop-off when you get to above 4%. And you're talking about very, very minimal numbers anywhere where we are right now, right? 7% or greater has a spike as we had sat there, but those people aren't selling, okay? And it points to new listings. In April, there were about half as many homes for sale as in April of 2019, though there were more listings than April 2022 when they were near record lows. The number of homes newly listed on the market in April fell 21% from a year earlier, an indication that sellers are holding back even during normally busy spring home buying season. Now, they talk about in here that, of course, the builders come into things, okay? But check out existing home sales. Existing, right? Huge drop-offs in pretty dramatic fashion where they are. So, yeah, the builders are going to come into there. An opening for builders, they bring that up as well. They talk about, though, one of the anecdotal examples here is you have this couple, bought a home in Phoenix in 2020 for $320,000, locked in a 2.75% fixed mortgage rate for 30 years. They're never selling that house, right? That's exactly what they get to. The guy got a higher paying job. They want to upgrade to a nicer house, maybe $600,000 to $700,000. They started looking in January of 2022. They were looking to pay about $3,000 a month for the new home. Guess what? They backed out of the market. By the time it hit about $4,000 by September is what they would have been paying. What are they going to do now? They're going to hold their house for about 5 more years, and then they'll turn it into a rental property if they move out of the state. Maybe rates won't be as bad as they are right now in the next 3 to 5 years or something like that. And yeah, there's no reason why you can't keep that house forever, man. I mean, what do they do? Look at these examples, right? So let's just say they put down 10% somehow, okay, through numerous different home loans. You can put down 5%, easy, 10%. Let's say they put down 10%. They get a mortgage of $290,000. That house is probably worth $550,000 right now, or something like that. $500,000, depending on where it is. They have tremendous value. They own a $500,000 to $600,000 home. They have a mortgage that's under $300,000, so they were over 50% equity, and they got a $290,000 mortgage at like 3%. What are they paying? Maybe with insurance and taxes, probably paying something like $2,200, $2,300, something like that, which you can rent that home out. So, yeah, if you want to tap the capital that's in there, the equity. Maybe you have to take out another home loan at some point. So that's the argument, right? You keep that equity in there. But for a lot of people, man, there's your retirement nest egg, right? You keep that house, you rent it out, you probably start getting cash flow positive on a monthly basis while you're accruing equity on it, and you keep the loan at 2.75%. Because here's the part that they don't actually talk about, right? You're losing money by closing out that loan at 2.75%. You gain no value for it. In normal times, you could sell that. You could sell that, lock in a profit to that degree. But you've, as in sell it to somebody else, you've taken out equity, a loan, and you're only paying 2.75% on it right now. People would love to be paying 2.75% right now, okay? What did Apple just push out? What's the percentage rate they're going to be over the Treasury? It's going to be more than 2.75%, okay? So people would love to be able to take out a loan, 2.75%. If you sell your house, you get no value for returning that money and ending that loan early, right? Think about how the bank actually makes out like a bandit there, okay? The people who had loaned you that money, they get back all of that money and they get to loan it out immediately at a higher interest rate. So it is a hit that you take, even if it's not upfront, because most of the time you got to do something with that money. If you're buying a different house, you're going to pay more money instantly, and it's quite a battle. So you're going to see that trend, and it's going to make housing prices have that X factor in there that nobody's going to be selling their house for any time. That's going to impact the rental market as well, for sure. All right. Let's jump around to some of the currencies as we got the Bank of England. Yeah, look at this, man. We got dollar strength. So interesting how these relationships are going. We got dollar strength, even as we have a declining interest rate, a declining market. You have the Bank of England raising rates, causing the pound to now drop. That thing has been on quite a run, though. Man, we've been talking to our man Teddy Kegstad about it. 125.32. You jump over to the euro right now. Quite a pullback to 109.07. And pay attention to these, man, because if this is the rollover, boy, it's quite a rollover, right? And this is what we've been talking about as well. You know, you talk about those in the camp that are saying, hey, you know, the Fed is going to pause. Europe might continue hiking. That's going to make European yields more attractive, which is going to cause weakness in the dollar. That all makes sense. But what was the move from 115 to 102? If not some type of an anticipation that we were potentially coming into a pausing, the end of the U.S. being on their hiking cycle. We were the ones first to the party. We've hiked to a dramatic fashion. Now you see it. The pound is still out there. The ECB is still out there. You have the yen, Japan, they're going to be joining the party. That is going to be competition as you have Japanese yields rising for the first time in forever. And what's happened? We've had the dollar pull back from 115 to 102. Well, that's a critical area, man. We're back. We're testing the low. And right now we're getting a bounce, and the market doesn't like it. We're down 22 points right now at 41.29. And, you know, just protect yourself out here, folks, because these are pretty decent market levels right now. Okay? You're talking about levels in the market of 41.29, which just brings us back to 5 or 6 months before the high, which was, to some degree, the end of a continuous run outside of a couple panics. You had the taper tantrum in 2018, and you had COVID. Those were the only pullbacks from the year 2008 to 2021. Okay, so you had a 13-year bull run from 666 or whatever it is to 4,800. You had two pullbacks, one of which was the pandemic, which was short-lived. And we are sitting at levels that are within 5 or 6 months of all-time highs. So make sure you protect yourself, okay? Because inflation is still at 5.5%. And we now have economic weakness creeping in, and it could be accelerated to some degree. It's going to be hard to make money, folks, for these companies when costs are still rising if inflation comes down. That's the battle here, okay? The only reason these companies are making money, Procter & Gamble always keeps coming to mind, the only reason they're making money is because they hike prices 10% back-to-back years. Well, if the economy weakens and consumers aren't willing to spend that type of money, and Procter & Gamble cannot raise their prices, what's going to happen to the profits at that company? I'm not sure, but they have a battle. And you're going to see good and bad companies come out of things because it is going to take some finesse to make it through an environment if they are unable to raise wages. And that's the premise here. The premise here is demand weakens. Companies no longer can get away with raising wages, raising costs. Because if they can, they do. That's business. They'll make more money. If that happens, are they going to be able to make money? It's going to be a battle because the way they've been making money is raising prices. Markets lower today, folks. Risk to the downside. S&P off 28. One more segment. Don't go away. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den. Available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&P down about 25 points right now. Let's put it back to a 15-minute chart to see the short-term action, man. It's been a sell-off since about 6 a.m. this morning. We got the economic data at around 8:30, and we're talking about pushing lows we had yesterday, 41.15. We're within about 10 points of that price level right now. You got the Dow escalating things off 400 points, 33,217. Interesting, you got the Dow off 1.2%. The Russell had been the leader on days like this, right? When the banks are getting crushed, the Russell had been the leader. The Russell only down about 16 points right now. You jump over to Disney shares, continuing to drop off 8.6%. So it looks like it's not a buy yet at $95, man. The other thing you can always do, folks, when you reach this type of turmoil, because I always say, man, no matter what happens with Disney, you get the market at 41.26. We pull back to 3,800, which is completely feasible, okay? Yeah, you're going to see pullbacks in everything. If you have some money that you're looking to invest longer term, maybe you keep some of it in a CD, you invest over the period of the next year or two to kind of give yourself that entry point, whether you start going up, you're pricing in, you go down, you get better entries, you're earning yield on the cash that you're saving anyway, and you put that out there. And let's see how some of those banks are trading, man. PacWest catches a little bit of a bid. God bless who's ever out there buying PacWest today, man, looking for a bid. Because at any moment, you never know when the news may come. If things are really that dire, they're probably trying to get to the weekend, I imagine. It's Thursday. What do they got? 36 hours to go for PacWest. Western Alliance, positive on a day like today. Remarkable, man. Up 6.6%. You got to love it. You got to love it. As the S&P's off 26. We jump over to the dollar index where we got some action. Boy, watch out, man. Moves, large moves in currencies right now in a big way. We got lower yield. We got a stronger dollar going on. You have euro weakness. Excuse me, that's the yen. Yeah, continuing to drop. The euro at 109 right now. And that is with pound weakness as well. That's after an initial spike. I think that 7 a.m. was when they came out. The roles have reversed. The trend is in place, folks. And watch out. But as I said yesterday, volatility everywhere in these markets, man. Don't be afraid to take a stop. The next trade's just right around the corner. Stay tuned, folks. Basil is out today, so we do have a replay this hour. We got Steve Rhodes at 11 o'clock, live programming after that. I'm coming back for the 10